Hello, hello, hello. And who here is ready for our challenge, Diversification Challenge 5.0? So it's my favorite week. I love sharing these challenges, and I hope you're ready to rock and roll. So tell us in the chat box, where are you coming from? And I can see I've got something here on my, on my lip. Where are you coming from? Where in the world are you coming from? Let us know in the chat box. Always fascinating to see where people are coming from. So we got South Africa, we got Vancouver, we got Cape Town, Durban. Where else are people coming from? I'm always fascinated in the world to see where people are coming from. Okay. Oh, we got Auckland. Postmasburg. I don't know if that's a spelling mistake or I've just never heard of the place. Johannesburg. Okay. Ladies and gentlemen, let's rock and roll. We've got people in all different time zones, so I'm not going to say good morning to the people in Auckland. It's good night. But for me, it's certainly a absolutely magnificent morning here in Knysna, South Africa. So I want to get going. We've got a lot to share over the next 5 days, and I hope you are ready. I hope you are strapped in, and I hope you are prepared to learn, because our aim over the next 5 days is to fundamentally shift things for yourself in terms of where you're at. So I just want to make sure, Shane, from your perspective, can you see everything? Have you got me?
Yep, all good, loud and clear, Scott.
Awesome. Okay. So let's rock and roll. We are going into Diversification 5.0, and it's all about, what is day one all about? Well, it's about understanding diversification, unlocking financial protection and freedom, and the power of diversification. Now, before I get started, I want to share a little story with you, and I want to ask for permission. So I had the privilege of spending 2 weeks on Necker Island with Richard Branson. And it was a dream of mine to meet Richard Branson for many, many years. I've read all his books. I've got all his books here. And my whole philosophy in life is that set big goals, and sometimes you have no idea how they're going to work, but ultimately it's about having the intention, putting it out there, and then turning into a reality. So I had the privilege. This was me and him actually kite surfing around Necker Island, his private island in the Caribbean. And when I was there, I had some homework, and the homework was, we had to bring one life hack. So there were 25 incredible entrepreneurs. So there was Richard Branson and 24 other incredible entrepreneurs. And then there was me. I was clearly the dumbest, poorest person in the room by a long way. And the homework was, we had to bring a life hack, something that was fundamentally making our lives easier, better, simpler, safer, etc. And I loved it because you had these 25 incredible people, and everyone sharing these life hacks, and everyone's sitting there taking notes, including Richard Branson, on how they could make life better. And it was actually my business partner, Shane. He said, well, that's what we are. We're wealth hackers. Because if you think about it, one of the fastest ways to get wealthy is to hang around wealthy people. Like I said, I always try and put myself in the room where I'm the dumbest, poorest person, because I can only go up in terms of my proposal. And so when Shane mentioned it to me, I was like, that's actually brilliant, because that's exactly what we all are. We're all wealth hackers. We're all trying to learn. We're all trying to grow. We're all trying to share, collaborate, partnership, and ultimately get ahead in the space of wealth. And so without further ado, I think a lot in the wealth space, people kind of take, it's quite formal generally, sort of jackets and ties, and kind of speaking, from a place of hierarchy, and speaking with a lot of acronyms, and, basically speaking over people's heads, and not really actually just talking about the simplicity of wealth. And so with your permission, I want to take my jacket off. And the reason being is that, for me personally, I don't, believe in having these formal kind of conversations. And so can I have your permission to take my jacket off? Because again, children learn a hell of a lot more from, having some fun, and I want to have fun with you today. So, but equally, by that token, I highly, highly recommend that if the rest of your life is important to you, and if wealth is important to you, that you put aside the next 2 hours or so, every day of the week, and you really kind of get present with yourself around what is it that you want and how are you going to create the life? And you know, again, back to your future self, I fundamentally believe that what is important is that if you take yourself 10 years from now, and if your 10-year self could talk to yourself today, what would they be saying? Would they be saying things like, pay attention, switch off your emails, you know, switch off your social media, switch off your phone. It's only 2 hours. Because the rest of our life is really important. And for me, that's the type of thing. I sent you a video yesterday. That's the type of commitment that you need. You know, you're going to go on this journey over the next 5 days, and some of it's going to feel overwhelming, and some of it's going to feel complicated. And we're going to hold you through that, so don't worry about it. But when those negative voices come into your head, just remember this principle of being a wealth hacker, because you're not on your own. You are part of a group of people who are collectively doing it together. And for me, you know, I wanted to start with some questions because I want to make this real for you. What would it mean to you in 12 months or less to be earning a globally diversified passive income without any hassle or complexity? Think about that. What would it mean to you in 12 months or less to be earning a globally diversified passive income without any hassle or complexity? Just take some time. What would it mean to you? A fantastic reality, game changer. It would change my life. What about if I could show you a system which could statistically help you get there 70% faster, simpler, and safer? Now, at this point, some people go, oh, it's a get-rich-quick scheme. Nope, you've noticed I've already spoken today in a decade. I don't believe there's such a thing as a get-rich-quick scheme. In fact, the fastest way to make money is to go to the casino, in my opinion, to bet on red or black. And equally, you've got all the risk. So you can put 100, whatever down, $100 down, and you can double your money. You can also lose everything. This is not that. This is systems that the wealthiest people have used for centuries that you can actually copy and you can implement, but there's no such thing as a get-rich-quick scheme. This will take a lifetime of commitment. This will take years, if not decades, to implement. But the bottom line is, in my opinion, it'll be well worth it, not only for yourself, but for your children and for future generations. And so I want to share with you two individuals, and I don't know if you resonate with these people, but Jordan is a high net worth 55-year-old, worked very hard in his life, wants to build a portfolio to ensure his wealth is preserved. Jordan wanted to build a globally, so this is what he wanted before he joined our mastermind. He wanted to build a globally diversified passive income of at least $5,000 a month, $10,000 a month, and he even dreamed of $25,000 a month, simply and safely. He wanted to diversify his investments across countries, currencies, and assets. He wanted to use his limited time to get effective results with predictability. He wanted to save decades of frustration and millions of dollars to get the right knowledge for him and his family. He wanted wealth protection, plan B, and a peace of mind. He wanted to be held accountable and have an accountability partner to get results. Most successful people in life know that to have accountability is absolutely critical to getting results. He wanted to have a family office to help him manage all his financial affairs. And if you don't know what a family office is, I'm going to explain it to you over the next couple of days. He wanted to create generational wealth for his family. He wanted to have a fully completed execution wealth plan and investor strategy sheet. And he wanted to get results. Now, as a matter of interest, who here resonates with Jordan? Who here is in the same boat as Jordan, thinking to themselves, well, I want that same thing. That's what I want. What about Victoria? Victoria is an entrepreneur in her 50s, devoted to her family and business, aiming to build generational wealth. She's got a packed schedule. She seeks a streamlined investment strategy that empowers her to make wise decisions, aligns with her goals, and frees up time for her grandchildren and her daughters. She wants to understand the investment landscape so she feels empowered to make the right decisions for herself and her family. She's tired of being told what to do by financial advisors and by the people. Victoria's focus is on achieving financial freedom to cherish more important moments with her loved ones. Now, who here would like to or resonates with Victoria? Or both? So, maybe it's Jordan, maybe it's Victoria, maybe it's both. Both Victoria and Jordan are people that we've helped to achieve this. And so if this is something that speaks to your heart, speaks to your mind, speaks to your intuition, then I highly, highly recommend that you strap yourself in and you commit to the journey that we're about to embark on over the next sort of 5 days or so. Well, ironically, a lot longer than that. I love this saying, and I heard it recently this year. You only become old when your regrets replace your dreams. Keep on dreaming. I have a lot of people that come to me and they say, Scott, I watched you 10 years ago. I wish I'd done something. Scott, I watched you 15 years ago. I wish I'd done something. Well, maybe it's too late. Maybe I'm too old. Maybe I'm too young. I don't have any money. I don't have time. I don't have knowledge. Or whatever the plethora of excuses that people come up with in their own minds as to why they can't get started. And I love this by Dr. Christo Mulder. You become old when your regrets replace your dreams. Keep on dreaming. But equally, saying that, there's a fundamental mindset shift. And again, I shared this with you yesterday. No one changes unless they want to. Not if you beg them. Not if you shame them. Not if you use reason, emotion, or tough love. There's only one thing that makes someone change: their own realization that they need to do it. And there's only one time it'll happen: when they decide they are ready. So I suppose the question you have for yourself is, are you ready? This is probably not the first time you would have heard this stuff before. It's probably not the first time you're going to be given solutions. But as I say, when the student is ready, the lesson is delivered. And the question you have to really ask yourself, whether you're a beginner or highly sophisticated, is, are you ready to build a globally diversified passive income? And everything that you get with that. Now, over the next 5 days, I'm going to be sharing with you a lot of lessons. I've been doing this personally for 28 years, and I've made a lot of mistakes. I've learned a lot of things. I've worked with some of the wealthiest people from all over the world. I've spotted patterns, and I want to be able to share all of those with you. But what I'm not doing is giving you financial advice. So please understand that I believe that the 20th century is an old school way of doing it, which is where people come along, they get advice. If they make mistakes, they blame, they shame, they sue, they whatever. I've got no interest in that industry. I am here to empower you. I'm here to give you the right information, to give you the right knowledge, to teach you. And what you choose to do with that is your decision. Each of us take accountability for our own actions. And so, again, not only for today, but for the next 5 days, I'm not giving you financial advice. I'm sharing with you my knowledge, my experience, which I believe is invaluable because it can help you avoid all the mistakes that I've made. Now, I want to share with you some psychology stuff first before we get going, because most people want the results, but there's something holding them back, because if they didn't have something holding them back, then they would already have it. And so let's take this. People get their musts and not their shoulds. They get what they tolerate. So let's look at that. If you're a father or a mother and you're looking after your children and you have to earn $1,000 a month. Like non-negotiable, you have to earn $1,000 a month because that's what you need to pay rent and pay for the food and whatever else. You'll figure out a way to make $1,000 a month. It's your must. You will figure out a way to get $1,000 a month. But you won't get your shoulds. Maybe you should earn 2,000. Maybe you should earn 5,000. Maybe you should earn 20,000. You'll get your musts, but not your shoulds. You'll get what you tolerate. So that's the first problem that people have. And the second problem is that they know all of this stuff. They understand everything, but they don't take the action. And it's really interesting because you get three types of learning. You get cognitive learning, which is all the theoretical learning. So I like to use the driver's license analogy because all of us have most of us have been through this, where no matter where you are in the world, you go for a learner's license. And, it's a book and you read through it and you study for it and you write a test. And, the question I would always have is when someone has written their learner's license, can they drive a car? And I think we'll all agree that the honest answer is no. They might know the theory. They might know the difference between a stop street and a traffic light, or a robot, as we call it in my country. And but the difference is they still don't know how to drive a car. Then you've got emotional mastery, and that's where you actually get in the car and you start to physically do it. And it's been many, many years for me, but where you got that mirror check, I mean, I'd probably fail. In fact, I guarantee I'd fail if I went and did my test now. But you've got a driver's I don't know what you call them, instructor that kind of teaches you, and that's the second level of mastery. And the third is physical mastery. And I love this picture because I know we've all done it before, where we've like spoken on our cell phone and we're drinking a coffee and ladies are putting on their makeup and whatever. And it's because you've driven for 10, 20, 30 years. And, literally you can actually concentrate on driving in a subconscious way and actually do other stuff in your life. And so, wealth is no different. It's a journey that you're going to go on, and you're going to go through all of these different steps in terms of this. But there's a second thing which I find incredibly important, and I learned this from Tony Robbins in 2010. And this year was one of the biggest game changers for me personally. So I'm going to stop sharing my screen quickly. Okay. So the first type of person you've got is a dabbler. And so what a dabbler is they like to learn something new. Let's just use sport to keep it simple. So they want to learn to play tennis. And so they go get some tennis lessons and they're playing tennis and it's all working really well. And they think to themselves, wow, I'm loving this tennis game. And they get this big steep learning curve. And then they hit what's called the ceiling of complexity. And then tennis becomes hard. And they go, you know what? Tennis is a rubbish sport. I don't want to do tennis anymore. I tell you what, I'm going to take up paddle. And they go start playing paddle and they love paddle and they have this steep learning curve and then they hit the ceiling complexity. And then it gets hard. And they stop playing paddle. They're like, I don't, paddle's rubbish sport. In fact, I don't like racket sports. I'm going to go play golf. And they start to do golf and maybe they get some lessons even. And again, they learn quickly and they're loving it. And then it falls off the ceiling of complexity. And this is a dabbler. In the wealth space, maybe they go and they learn crypto trading. They're like, this crypto trading thing's amazing. Like, I'm making some money. And then they hit the ceiling complexity and it falls off. And they're like, crypto is useless. I'll tell you what, I'm going to go do Forex trading. So they learn Forex trading. And again, they like hit the ceiling complexity and it falls off. And then they're like, actually, no, bugger this. Crypto, Forex, tell you what, I'm going to come to one of Scott's seminars, and I'm going to learn about property and alternative investments and whatever. And yes, this challenge is awesome. I'm learning so much. And then they hit the ceiling complexity and they're like, oh no, bugger that. Like, that's also too hard. I'm going to go do something else. And that is a dabbler. So, just to share with you, I don't really know that myself, because the second type of person is a stressor. Now, a stressor is someone who's determined to find the way. And so they over here, and they start to learn something new, and then they hit that ceiling complexity, and they stress, 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 and they break through. Ladies and gentlemen, they break through. It's flipping awesome. And then what happens? They hit the ceiling of complexity, and they stress, 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 and they break through. Now I know a stressor very well. You're looking at one on the camera. You're looking at one in the mirror. Every morning when I look at the mirror, I look at a stressor, because this was me my whole life until 2010. You know, I figured I had to do it all myself. I had to go read all the books. I had to go on all the courses. I had to do it all myself. I had to find the way. And, you know, I've got an honors degree cum laude. I've got a master's degree cum laude. I've got AIPP, Association of International Property Professionals, which is the top one out of England. I got CRS, which is Certified Residential Specialist, which is the top one out of America. I've got PDP, which is the Property Development Program, which comes from the business school, the Graduate Business School out of Cape Town. You name it, I've done the courses. You name the mentors, Dr. Hannes Dreyer, Triok, Kurt Kitsi, Dr. Dolph de Roos, you name them, I've done it. I've probably spent at least $1 million in personal development. And my whole philosophy was, I had to learn. And whenever I hit that ceiling complexity, I had to break through. Now, just my interest before I go on, are there any other stresses in the room? Anyone else that's like, I don't know, you want to learn about wealth, you want to learn about how to build passive income, you want to learn about diversification, or anything for that matter. Are there any other stresses in the room that can resonate? Because if you're a stressor, you know exactly what I'm talking about. The dabblers are probably still here today. They tend to stay for day one. They don't, like, we can't lose them by day 2 and day 3. But the stressors are the people that will kind of hang on all 5 days and try and figure it all out and do it all themselves. I can see lots of people saying, yes, that's me for sure. Perfectionist. Yes, yes, I'm a stressor. Well, to all the stressors in the room, I want to give you some good news. So it's a massive lesson that I learned in 2010, and it was one of the best gifts I was ever given. So in my whole philosophy in life has been to work harder than anyone else. So at school, I studied harder. I wasn't the cleverest, but I studied harder than anyone else. And, you know, that's how I managed to get the results that I got. University, exactly the same thing. On the sports field, I wasn't the most talented, but I was always the fittest. In business, my philosophy was just to work harder than you. And I got to 2009. We just had the global financial crisis. I couldn't work any harder. I was like burnt out, and I still wasn't getting the results that I wanted. And this was me, like, just stressing. And I mean, we were doing incredible results. You know, we were doing, I helped in 2008, I helped 400 people buy houses. My best in one day was 86 properties in one day. So by normal standards, we were crushing it. But by the standards that I wanted for my life, to live a life that was extraordinary, it just wasn't good enough. And yet I couldn't work any harder. It just wasn't working. And so I found this thing from Tony Robbins called Business Mastery. And you had to apply to it. And I spent hours and hours doing the application. It felt like I was applying to Harvard University. And anyway, I applied to it, and I flew there in 2010. And it was a 5-day course. And it was a course that literally, and I know people use these words strongly, like changed their lives, but it really did change my life, because it changed my philosophy on how to get successful. And the reason being is that up until then, I'd been a stressor. But Tony Robbins taught me a new way. And that way was the way of mastery. And what I learned from Tony Robbins with mastery was that it was a different way of doing it. Like, this is you over here, and you want to get to be like Richard Branson. I'm just using me as an example. Like, so this was me, and I wanted to be like Richard Branson. Well, the way to mastery is that you model people all the way along. There are a lot of people that have been successful already. And so you copy them. And you realize that you're going to go up and you're going to go down, you're going to go up and you're going to go down, and that it's a journey, and that it's mastery. And then I actually realized that there was an easier way to do it. You could model people, you could copy them, or even better, you could just partner with them. And if you could partner with them, then you could dramatically increase this learning curve. Because I can go and learn about industrial property in America for 20 years. Or I can partner with someone that's already been doing industrial property in America for 20 years. And I can dramatically speed up that process. Now, just tell me quickly if this makes sense to you. Again, it's a fundamental philosophy of I must do it all on my own. I must stress. I must work hard. I must read all the books. I must go on more courses. I must find a mentor. I must find a coach. Or I can just partner with someone. And if I partner with them, I'm still going to get that learning. Don't get me wrong. I'm not handing over my power. I'm going to learn and grow. But by partnering with them, I can go so much faster and safer. So this is probably the most, I'm going to say this a few times maybe, but it feels like to me, this is one of the most important lessons I can share with you. And if you take Tony Robbins, he's built 400 businesses, 400 businesses, 8 of them billion-dollar businesses in 8 different sectors. And that's why I got a picture of Richard Branson here, because for me, he like epitomizes mastery. You know, if you imagine him coming into starting a new business, he's going to expect problems. He's going to find a pathway. He's going to look for the easiest way to do it. He's going to look for others who have done it. And he's going to look for success. It leaves clues. He's going to model. Can you see this picture here? And so it's this philosophy of partnership and modeling that we are going on this journey with. And to be honest, if it doesn't resonate with you, then I would sign off. Because our whole philosophy of business is new age, it's collaboration, and it's partnership. I believe it's the currency of the 21st century, which is all around trust. And again, if it doesn't resonate for you, if you want to go and do it all yourself and kind of have that old school mindset of control, I'm not saying it's wrong. I'm just saying it's a different philosophy. And if you're not aligned with this philosophy, then I'd highly recommend that you don't waste your time. One of the things that I find really, really interesting is that I had this mindset shift in, not so much, I suppose it was a mindset shift in 2010, this learning lesson, but it took a couple more years. You know, I'd been trying to do commercial property my whole life. If you've read any book, if you take this book here, Real Estate Riches by Dr. Dolph DeRoos, which is part of this series here, Rich Dad, Poor Dad. You know, if you've read this book, him and every other property person in the world, real estate person in the world, says that you should be in commercial property. But they don't teach you how to do it because it's too difficult. It takes a lot more knowledge, a lot more money, a lot more experience, a lot more networks. And I was like, how the hell do I get into it? And I'd helped thousands of people buy residential property. I had invested in a lot of residential property, but I wasn't in commercial property. And it was through that mastery that I realized in that partnership. And in 2014, I did my first commercial deal with 82 investors around the world on 5 different continents. And it was just a game changer for me. It literally just changed the playing field for me, because I realized I had 16 properties at the time, residential properties, and they were literally like high in hassle, low in return. High in hassle, low in return. And then I invested in these commercial properties, and they were high in return, low in hassle. Let me repeat that. High in return, low in hassle. And I started to realize that this mom and pop investing, this middle-class professional mom and pop investing, was literally why the 99% of people don't retire wealthy. And I realized that this commercial investing, this institutional, sophisticated way of investing, no one teaches us how to do it. If we always made to feel stupid, we don't have the money, we don't have the time, we don't have the knowledge. And yet through partnership, I could access it. It was a game changer for me, absolute game changer. And I want to share that game changer with you. And my strong recommendation is that you might start here today as a stressor, but I hope that over the next 5 days, you'll be able to evolve into a master. But do realize that as per mine, You can get the knowledge like I got in 2010, but it actually took me time. The light bulb can go off like that, but it takes time to actually realize and to implement. Does it make sense? So just let me know in the chat box if this is making sense to you. I'm always fascinated. Okay. So the other warning that I want to give you is that there are some very conscious steps that I'm going to be taking you on. And so you're going to often start, and this doesn't matter whether you are highly sophisticated or whether you're a rank beginner. Because even if you're highly sophisticated in a country like, I don't know, South Africa, and you own a whole bunch of commercial property in Cape Town, if I suddenly start talking to you about America, England, Australia, Europe, you know, the 15 different asset classes, different currencies, it doesn't matter how sophisticated you are, there's going to be areas that you don't know about. And so what we do is we go from a place of unconscious incompetence. We don't know, in fact, we don't even know what we don't know. Then we go to conscious incompetence. Now we know that we don't know. Then we go to conscious competence. We know and we're starting to learn, but we have to think about it all the time to really be able to implement it. To unconscious competence, where literally we know and we can do it without thinking about it. Please understand that I'm going to be taking you through this journey over the next 5 days. So if you feel overwhelmed, or if you feel, oh my word, what's going on, or this is too much, or I don't understand, just trust the process. As my business coach says to me all the time, trust the process. I'm very consciously taking you on this journey with my partner Shane and Alex. We've designed this to take you through this journey, but we're not going to drop you. We're not going to leave you in terms of that process. So just let us hold this container, and you know we will take you on this journey. Is that a fair agreement? Yes? Okay, just some action steps. One of the things that I don't like when I do different courses and challenges and whatever, if there's not action steps. So each day, I want you to walk away with the results. So the silver is compulsory and the gold is bonus. And I saw someone asking about the recordings. These sessions are being recorded, and for the next week, they'll be available. But for the VIPs, they go into the library and you'll have them forever. And what's important is that, you know, I would highly recommend that you try and do the silver homework every day. And you can come back off, you know, after the week and do the gold homework. I've specifically designed the silver homework to be about 20 minutes. And so it shouldn't be a lot of time, but what it allows you to do is make measurable progress every day towards the goal that you want. The next thing that Shane has very kindly done is he's created a resources document. So you can go along to this resources document and you can get all the different resources. So if you just click, you see he's put it in the chat box there for you already. And if you see my screen here, you can see the resources. Everything all in one place. Just a quick shout out to Shane. Don't you think it's pretty cool to have all these systems and everything, making it so easy for you? Don't underestimate all the work that he's doing behind the scenes to make this a reality for you. So thank you very much, Shane. I deeply appreciate it. And then you should all have this strategy sheet downloaded. And if you listen to the instructions, and I know most people don't listen to instructions, including me, but if you listen to the instructions, you should have printed 2 copies of this. Okay. One, you want to keep for after day 5, because you're going to get all the knowledge and you should be able to fill it in. But I would also, and as per your homework, I asked you to try and give it a go. Because remember that unconscious incompetence, we don't even know what we don't know. And so if I said to you, well, why do you want globally diversified passive income? Maybe actually, I'll use my mouse, it'll be easier. So why do you want globally diversified passive income? What are the top 5 countries you want to invest in? What are the top 5 currencies you want to invest in? What are the top 15 assets you should be investing in? How do you find the right partners and avoid 80% of the mistakes? How do you build a plan over time to get you to your financial freedom? And ultimately, how do you use technology to empower you? Now, I would be sure that if you did this last night or this morning, even if you've done this challenge already, I reckon this would be quite tricky to fill in. And one of the things I believe a lot in life is simplicity is power. So, I could give you a 500-page workbook, and the chances are you're not going to do it. And so what Shane has very kindly done is put it into one page, literally one page. Simplicity is power. And our aim by the end of the 5 days is that this should be filled in for you in a personalized way. Is that an agreement? I mean, would you like to know the top 5 reasons you want to invest? By the way, that's the fuel to make it a reality. The top 5 countries to invest in, the top 5 currencies to invest in, the top 15 assets to invest in, how to find the right partners and avoid 80% of the mistakes, have a wealth plan in place, and how to use technology to do it safely and simply. Is that a fair deal? All you need to do is commit your time. And again, we are a very strong believer in community. So I would highly recommend that you go along to the Facebook group and join the Facebook group. In the Facebook group, we can collaborate, we can ask questions, we can chat. You can submit your homework. I'd highly recommend submitting your homework, by the way. Most people think, oh, but I'm silly and I'm stupid and I don't know what to do. No, rubbish. The commitment of putting that stuff out there is so powerful. And you're with a like-minded group of people. I remember a guy called Chet Holmes years ago taught me it's far better to practice on the, with your peers than it is to fail in public. And so, this is a practice environment. You can't get it wrong. There are no wrong questions. There is no way to fail. And so put it out there. And as Shane has put in the Facebook group there, you can literally go and click on it and join our Wealth Hacker group and, participate, become part of the community, collaborate, ask questions, etc. And then the other group is the WhatsApp group. And this one, we do keep one directional. So this is not so much for collaboration, but this is for communication. This is where we post links and stuff. So I would highly recommend that you don't, I would highly recommend you do join this group, even if it's just for the next 5 days, just so we can communicate and chat with you and let you know what's going on. Okay. And then at any point, if you're not sure what to do next, then I would go to this, which is our navigator. And again, this is where Shane's gone and made life really easy for you. And a lot of people have said to us over the years, I think this is our 4th challenge. And basically, people have said, oh, but I'm not sure what to do next. So what Shane built was our navigator. And the beauty is if you literally go to it, diversificationchallenge.com/next, it'll give you a lot of clarity around the next steps. It'll ask you some pretty pertinent questions, and it'll help you get clear in terms of your next steps. Okay, so if you ever get lost, just save that link. You don't have to do it right now. Maybe do it as part of your homework or whatever, but it's very, very useful in terms of that navigator. I've already shared with you, the whole thing around financial, advice. And ultimately, this is about empowering you. And then we do run a homework competition. There was actually a prize for people that posted their homework on the Facebook group. So again, back to listening to instructions. Anyone that posts their homework, we then look for the people that are collaborating the most, and we find reasons to give out prizes. So, and the prize is the VIP upgrade. So every single day, we are going to run a VIP session. So what that is, and again, I learned this from Tony Robbins, I'm going to give you all this information for free. And then we're going to jump in a private Zoom room for the VIPs, where I will share with them extra knowledge I'll answer any questions that they've got. I'll solve any mindset problems that they've got. I'll remove any blockages. I'm an internationally qualified coach, so I can take them through processes to help them. Because often what happens in the world is that it's your mindset which is going to have the biggest impact. And so we're going to run these prizes both before and at the end. And there's going to be a prize at the end, and you just have to use the hashtag diversification. And that is for the most, engagement, basically, in terms of the process. You can still sign up to be part of the VIP. Literally, it's only starting today. So, I highly recommend that you engage in the chat, that you join the VIP. And again, just to be clear on a couple of things with the VIP, not only will you get at least an hour after every session, so for the next 5 days, that's 5 hours. I charge $1,000 an hour. So, $47 is an absolute no-brainer for that process. Secondly, we find the people that join the VIP are the ones that get the most results 6, 12, 24 months later. Because when people pay, they pay attention. So they're fully committed, they're fully invested, and they get results. That's been our experience. Thirdly, you get the recordings. So you've got the ability to go back and watch this over and over again if you wanted to do the exercises, etc. It's all within the university. And you actually get module 1 of Wealth Going Global. So a huge amount of value in terms of the process. And if you understand ROI, return on investment, you also get a $50 discount on purchasing a course. And the beauty of that is that you're paying $47, you're getting a $50 discount. So you effectively are getting 100% return on investment if you want to talk financially. Okay. So we are here to help people live a life unlimited. We believe that it happens all through Diversification 5.0. And I want to start with a story because it sums it up perfectly. So this is, for me, a personal story. And the one person is my uncle. And the other person is my dad. So my dad in 1976 in Zimbabwe decided that the country was not where he wanted it to be. It was economically and politically unstable, and he decided that he wanted to leave. And he packed everything with his wife, my mom, into the car, and they drove to Durban. All that they could take was what was in this car, a little Renault. And my father ended up living a life of reaction. He lived in Durban, South Africa. He was susceptible to the economy. He was susceptible to the politics. And ultimately, he was like a cork on the ocean, being very reactive to what was happening in the external environment. The other person was my uncle, and he did it differently. In 1980, he opened his first offshore bank account, and he started investing in assets overseas. And in 2003, so 23 years later, remember I told you this is not a get-rich-quick scheme. 23 years later, he decided that he wanted to move to Australia. And so at the age of 50, he bought his way in to Australia, 53 to be exact. He bought a house for cash in Brisbane. He sent his kid to one of the best private schools, Churchy, who went on to row at some of the top universities in the world. And the best part of this whole story, in my opinion, was he never had to work for an Australian. Now, the question I've got for you is that the one brother was super reactive and the other brother was super proactive. Who do you want to be? Do you want to be the reactive brother or do you want to be the proactive brother? Just take some time. I'm going to have a sip of water and you think about it. Which one do you want to be? The reactive brother or the proactive brother? Or sister for that, Diane. So it's only Diane who's concentrating. It's really important that people take the time to think about these things. This is only the rest of your life. And, one of the reasons that we're here is because I want to share with you the lessons that not only have I learned personally, but that I've watched what works. And it becomes really, really, really important because if I show you the next slide, my father, this was a picture of me and my dad on my first construction project. So my first property project, I was 13 years old and we renovated our house. And this was me helping build a a double bedroom bathroom onto our house. And at a very young age, I realized that the system was broken. You know, my father did what we were all taught to do. He went to school, he went to university, he worked really hard, he got a great job, he became financial director of a listed company, he invested, he paid his taxes, and yet when my dad died, he died broke. Broke. He's 59 years old. And that caused me to go and do a lot of research, because I was like, that's ridiculous. We've all been taught to do this. We've all been taught to go to school and work hard and go to university and work hard and get a great degree and get a great job and invest and put our money into the financial industry and pay our taxes and we're all going to retire happily. Rubbish. I witnessed it personally. I then went and did the research, and I learned this originally from Dr. Hannes Dreyer. At the age of 65 in England, Australia, and America, 94% of people will either be dead, broke, or reliant on the government. 94%. 5% of people will be financially independent. Now, a lot of people think, yeah, I'm financially independent, until they realize what it actually means. You earn 25% less than your last paycheck. 25% less than your last paycheck. In my opinion, you're just financially trapped. Which means that only 1% of people finish the race. Only 1% of people are wealthy at the age of 65. And I remember thinking at a very young age, that's ridiculous. It's not even who wins the race. Only one person is finishing the race. You know, I read this book when I was very young, Rich Dad, Poor Dad, and I'd be surprised if most of you haven't read it already. And he talks about the E, the S, the B, and the I. And he goes into more detail about how the employee is all about active income, hard work, no security, no time. The self-employed is about large debts, insufficient funds, and stress. And this is 95% of the world's population, and yet they've got less than 5% of the wealth. And on the right-hand side, you've got passive income. You've got the business owner, easy work, stability, spare time. And then you've got the investor, no debts, plenty of money, freedom. And this is 5% of the world's people, but 95% of the world's wealth. And the question is, how do you get there? And so I started asking these questions from a very, literally I did my first property transaction when I was 22. From a very, very young age, I was like, no, this has to be different. And it made me realize a massive myth. Because again, back to all these books, all these Rich Dad, Poor Dad books, all the courses, everything I told you already, was as a stressor, I thought I had to go and do it all myself. I thought I had to be out there and go and read all books and do all the courses. And if I want to learn commercial property, I must go and do degrees, which I did, by the way, et cetera, et cetera. And then I realized, hang on, there's a much, much easier way of doing this. I can just partner with people. It fundamentally shifted my mindset. And so where did this all start? Well, I told you already, this was my first project when I was 13. We built this double bedroom bathroom, on here. When I was 22, I bought a house in Rondebosch with a friend of mine. We got planning permission and renovated it into 6 townhouses. When I was 24, I bought my first house in London, this terrace property here. At 25, I started a company, International Property Solutions, and I helped thousands of people buy houses or apartments in South Africa. I helped hundreds buy property in England, hundreds buy property in Australia, and hundreds buy property in America. But I soon realized that there was a massive problem for investors. And that's that we were stuck in country. And if we could get out of the country, there were massive barriers and hassles to investing internationally and in commercial property. And that wasn't even taking into account all the tax and the structuring and the complexity. And so what I realized was that 99% of people could not invest like the top 1%. And there were some real life stories that made this a real reality for me. This was 2009. We just had the global financial crisis in 2008. And a lot of developers got themselves into a lot of trouble. And this was in Wimbledon. Now, Wimbledon's where the tennis is in London. It's a great area. These properties were selling for £320,000, and I could buy them for between 160 and 180,000 pounds each. They were finished, they were furnished, and they were tenanted. And they were being sold by Barratt Homes, one of the top developers in England. And I wrote an investor letter to all my investors. I had 2,500 investors. And I literally said down the bottom here, I don't care what happens with the market in the short term. This represents a real opportunity. Like for me, it was a no-brainer. Like you were buying properties at a 40% discount with an 8% yield, cash flow positive from day one, quite a lot of cash flow positive, already tenanted, already furnished. It was like a no-brainer. There was just one small problem. I couldn't do one unit at a time. I had to do, I think there were 48 units, and I needed 10 million pounds. So I went to my 2,500 investors. I was like, this is a no-brainer. We need to participate. And people just laughed at me. I tried to buy the unit on my own. I went to Barratt Homes. I sat in the office. I said, I want to buy one unit on my own. And they just laughed at me. And it created a huge amount of pain because I was like, okay, I'm sick and tired of investing like a mom and pop investor. I want to invest like an institution. I have to find a way to bring money together so that we can invest like an institution. The second time it happened was I was in Bondi Beach 2009, Bondi Beach, Sydney in 2009. And I met these two very wealthy gentlemen, and they were investing in medical buildings. And I remember saying to myself, why medical? I asked them, why medical? You know, we just had the crash, and I've got all these degrees. I've done all these property courses, and no one had ever taught me about medical. And they said, well, think about it. No matter what happens in the global economy, people need doctors. Secondly, doctors never leave their premises. And thirdly, doctors are hell of a good at being doctors, but they're not good accountants. So they signed very good long-term favorable leases. And I was like, wow, that's a no-brainer. So I was like, how do I participate? And they said, no, well, it's easy. We're raising $40 million. There's 8 slots of $5 million each. And I remember running back to my investors and going, hey, there's this incredible opportunity in Australia, and all I need is $5 million. And again, we missed the boat. By the way, that company listed on the Australian Stock Exchange and is now worth $700 million. So both of those stories created tremendous pain for me. And I was like, no more of this mom and pop stuff. It's time to be like an institution. And we did our first commercial deal. I've sort of alluded to this already in 2014. We had 82 investors. We partnered with some incredible people on the ground. And, we bought these 6 buildings, a portfolio of 6 buildings. It was a $16 million transaction. We owned it for 5 years. We got an incredibly positive return, and then we exited it. We went full cycle. And this was, for me, a massive learning lesson where through partnership, I could do it so much differently. I didn't have to learn everything about commercial. I didn't have to learn everything about medical. I could partner with people that had extensive experience in it. And since then, we've now got members in 178 countries. We've facilitated over $1.3 billion in deals. We've had over $100 million go through the platform, over $30 million paid out in exits and dividends, et cetera, et cetera. And so whether people want to invest into America, England, Europe, Australia, or even South Africa, it's all become a reality now where people can do it safely and simply using technology. So why do people diversify? Well, the first one is preservation of wealth. The second is a plan B. The third is peace of mind. And the fourth is freedom. It's freedom of choice. And if I don't remember, later this week, I would like to share with you the story of my uncle and, what does freedom actually mean in terms of that process. And I mean, if you take the last 2 years, we live in crazy times. We've got the Ukraine war, we've got inflation at a 40-year high, we've got interest rates rising, we've got fuel costs going up, we've got the stock market all over the place, we've got load shedding in South Africa, we've got Israel and Hamas and even Iran at each other's throats. And the only way that I see, if you look back over trends, over decades, to survive in uncertain times is diversification. And we call it Diversification 5.0. And the reason we do is that we believe you need to diversify across countries, currencies, assets, partners, and time. It's all about creating globally diversified passive income. So that sits at the middle. Globally diversified passive income, and it's about diversifying across those 5 areas: countries, currencies, assets, partners, and time. But in simple terms, and please write this down. Literally, hopefully you've got a pen and a piece of paper. I've done this for 28 years. And if you literally want the simple way, what you need to be successful is the right information and the right partners. It's literally that simple. You need the right information and the right partners. So what we're going to do over the next 4.5 days is I'm going to share with you how to get the right information and how to find the right partners. If you take the agenda, it's to turn money into globally diversified passive income. That's why we're here for 5 days. Day 1 is all about understanding diversification. Day 2 is the types of investments. So the asset classes and risk. What are you actually going to invest in? Day 3 is about building a diversified portfolio, asset allocation, the how. Day 4 is risk management, the who. And day 5 is putting it all into practice, the when. You should be able to see this all on the sign-up sheet. But day 1 is about unlocking financial protection and freedom, the power of diversification. Day 2 is the different types of investments, balancing risk and return goals. Day 3 is learning how to craft a diversified investment portfolio that aligns with your financial goals. Day 4 is about mitigating risk, mastering investment diversification. And day 5 is about creating a personalized action plan to diversify your investments effectively. So that's enough of a setup. Who's ready for understanding diversification? Who here would like to understand why it is the single most powerful thing that you need to know when it comes to investing? Okay, so what are we going to do right now? Our mission is to turn money into globally diversified passive income. And what are we going to do? We're going to prove that diversification is the single most important component to financial success. We are going to unlearn the things that are stopping you from doing it. And we're going to learn from real people and real stories who've done it. Who's excited? Who would like to know those 3 things? So why is it the single most important component to financial success? Unlearning what's stopping you and learning from others who've done it. Okay, let's rock and roll. So if you do a dissertation, so if you've been to university, you've done an honors degree or a master's degree or a doctorate, you do a dissertation. And in the dissertation, you've got a thing called a hypothesis. And what a hypothesis is it's a statement. And you're either trying to prove that statement right or you're trying to prove that statement wrong. So my hypothesis, our hypothesis, is diversification equals financial success. And I did a lot of research with my partners around this, and I want to prove or unprove to you whether diversification equals financial success. So, according to Ray Dalio, the single most important component to financial success is diversification. He says you need to diversify across assets, within assets, across markets and currencies, and across time. Now, to put in perspective, Ray Dalio is, in my opinion, the person that I follow most and trust most in the financial markets. He manages $160 billion. He's done it for over 40 years. And I'll show you his results just now. But it's incredible what he's achieved. And what I love about him is he's not sensational. He doesn't talk, for the short term. Robert Kiyosaki can often kind of be a headline grabber, whereas Ray Dalio just speaks sense. Whatever I read, whatever he shares, to me makes a huge amount of sense. And in this book here, which Tony Robbins wrote back in 2010, called Money, Master the Game, Tony Robbins was so pissed off with the fact that 10 million Americans, 10 million class Americans went bankrupt in the last crash of 2008, 2009. And he went out and he interviewed 50 of the wealthiest people in the world. And his philosophy was, let's go and learn the patterns of what the wealthiest people are doing. And one of them was Ray Dalio. And that's how I found out about Ray Dalio. And Ray Dalio has the secret formula, and he wouldn't share it with anyone. And Tony Robbins was like, dude, you're 75 years old. You've lived your life. Why not make your legacy about sharing your knowledge with others? And so he finally persuaded him, and he shared his secret formula. And he basically said, you need 15 uncorrelated bets in an attractive array of assets that don't move in tandem. That will reduce the risk by 80% and increase the risk-return ratio by a factor of 5. Now, I've done this for many, many years. And most people, when they see that statement, their brain just switches off. They go, financial industry, I don't understand the lingo. It makes no sense to me. I don't trust myself. I'm going to go and talk to my financial advisor. Let's be honest with me. Who here feels like that when they read this? Or does that statement make perfect sense to you? Let's be honest. This is a learning moment. This is not a blaming, shaming moment. This is a learning moment. Like, how do you feel when you read that formula? Because that's his formula, okay? He's managed $160 billion. I'm going to show you his results just now. But he's earned a return of 21%, year on year for 40 years. It's unbelievable the results he's achieved. And that's his formula. And I'd love to know what people think as to whether it sort of makes sense. So, what's interesting to me is when I look at it, and I'm interested because a couple of people are saying they understand it in theory, but wouldn't know how to do it. Makes sense. But how the hell do you implement it? Proof is in the pudding, goes over my head. I'm starting to understand it better after seeing it a few times. So for me, what this says is actually really simple. All it's saying is you need 15 quality investments that are not tied together. 15 quality investments that are not tied together. That's all it's saying. If you've got 15 quality investments that are not tied together, you'll reduce your risk by 80% and you'll increase your return by a factor of 5. Now, who here would like to reduce their risk by 80% and increase your return by a factor of 5? Reduce your risk by 80% and increase your return by a factor of 5. So lots of people saying me. So I know it sounds too good to be true. I know that a bunch of you, your brains are going, it sounds too good to be true. But the point is the man's done it and his team have done it for 40 years. So, and some people say they're not sure how. I'm going to show you how. Here's a TED talk from him.
So what the individual investor needs to do is know how to diversify well. So the word that I would know how to diversify well and in a balanced way, to diversify it in asset classes, to diversify it in countries, to diversify it in currencies, to know how to diversify that well so that you have wealth diversification is important. Do not think that cash is a safe investment. Cash is almost always the worst investment. So you have to think about that. You should think a little bit unconventionally. Diversify well, be humble, don't market time, and be conscious of the dangers of cash.
So that was a TED talk. You can go and check it out. It's within around the 26-minute mark. And he said the most important thing for an individual investor is to know how to diversify well and in a balanced way. You need to know how to diversify in assets, countries, and currencies. Knowing how to diversify your wealth is the single most important thing. So can we say that, according to a gentleman, and again, I'd highly recommend this book, Principles, with 40 years experience, $160 billion under management, he reckons the single most important success to financial success is diversification. What about number 2? The Vanguard Group. So the Vanguard Group manage about $8 trillion in deals, in money. And according to a study by the Vanguard, diversification can reduce risk of a portfolio by as much as 70% while maintaining a similar return. What about formula number 3? The BlackRock Group. BlackRock manage about $8.66 trillion. And in a report by BlackRock, investors who diversify across asset classes, regions, and sectors may experience better risk-adjusted returns over the long term. The report also notes the benefits of diversification are so fundamental that they are some of the few things that investors can rely on with confidence in a rapidly changing world. What about number 4? Well, Tony Robbins. I've already spoken about Money Master the Game, and this was actually me with him in Fiji. I went to Business Mastery 2 in 2010. And what I found here is research has shown that 96% of active fund managers fail to outperform the market. I found that fascinating. So people give their money to financial advisors, and 96% of fund managers don't even beat the average. So if you do the research on what Tony Robbins says, he says diversification is essential. Asset allocation matters. We're going to talk about that in depth tomorrow and on Wednesday. Don't over diversify. So you're going to notice a pattern that's going to come up here over and over again. Ray Dalio spoke about having 15 quality investments. Don't over diversify means don't put your money in a mutual fund that's in hundreds, if not thousands of things, and you've actually got no idea what you've invested in. Seek expert advice. Stay informed and be proactive. And automate your investments and tap into the power of compounding. So use technology. What about number 5? So this guy's really interesting. Investment biker. So he was George Soros' business partner. And at the age of 37, he was a US dollar billionaire. And he retired and he went on a bike. And he holds the Guinness Book of Records. And he traveled the most distance around the world on a motorcycle. And his name is Jim Rogers, and he now lives in Singapore. And he met my uncle. My uncle started the Botswana Stock Exchange. And he met my uncle back in 1987. And he didn't invest anywhere in Africa except for Botswana with my uncle. Anyway, through my uncle, I got to meet him in Singapore, and I've had 2 lunches with him. And absolutely phenomenal. And this was me in his house. And he had my book, Property Going Global, and I had his book, Investment Biker. And this is what he's got to say about investing. So you want concentrated investments. Diversification is something that brokers came up with to protect themselves. So again, you're going to see the pattern here. Ray Dalio, 15 quality investments. Tony Robbins says, don't be over diversified. Jim Rogers says exactly the same thing. Have a long-term focus. Rogers emphasizes a long-term investment horizon, identifying opportunities in undervalued or overlooked markets. And then skepticism of traditional diversification. Rogers has expressed skepticism about the efficacy of traditional diversification. So just be careful. The word diversification is a big word. And so you've got to be quite clear on your strategy and what you're doing. And we are very clearly not saying investing in mutual funds that are hundreds of, if not thousands of different investments. What about number 6? Richard Branson. So you probably picked it up already, but I love this guy. And this is probably more of a focus with regards to business, but he says focus on your core strengths. You need to have an entrepreneurial mindset and take calculated risks. And you need to build a diversified business empire. So his logic was not to have all his eggs in one basket. And like I've said to you already, he's got over 400 companies. So it's about, building diversification and different income streams. What about number 7? Dr. Dolph DeRuss. So this book, Real Estate Riches, that many of you have read, I'm sure. It was my first property book that I ever read. This was me on his buyer's trip. So I spent $8,000 going on his buyer's trip in 2011. And this was us in Phoenix on the steps of the courthouse. So this was the crazy days where all the properties were getting repossessed and you could buy properties on the steps of the courthouse. And what does he have to say about it? Well, real estate is a diversification tool. So don't leave all your money in the stock market. You need geographic diversification. So don't be stuck in one country. You need different property types and strategies. So don't only buy houses as an example, be in different properties. You need to have risk management. And there's a great little video here that I want to share with you. And so let me just, I'm going to play this video for you. And this was actually me interviewing Dr. Dolph DeRoos when I was on that buyer's trip. So this is an old video. It's, where's it gone there? There it is. It's from 2011. But I think it's really good when one considers property and what one should be looking at from a property perspective.
You've traveled the world, been around the world 100 different times. I think you said the other night at the presentation we went to, the world's going global. Tell us a little bit about what your thoughts are. 10 years ago, property was very much a case of I lived in Phoenix, I bought a house in Phoenix. I lived in Johannesburg, I bought a house in Johannesburg. And with the advent of the internet and access to information and cheap flights and all that sort of stuff, it's going global. The bottom line is people are interested in returns in different areas. You could get a far better, possibly a far better deal here, better yield, etc. So now suddenly, well, should I invest in Joburg? Should I invest here? Well, it actually comes down to numbers.
It does come down to the numbers. If you live in Joburg, I would say get your first investment property in Joburg. Probably get your second one there. You've got to cut your teeth on it. You've got to learn the ropes. You've got to learn what it takes to be a good investor. But if you've got 10 properties in Joburg and you're looking at buying an 11th, I, for one, would say don't buy it in Joburg. Buy it in Cape Town. Go to Port Elizabeth. Go to Durban. Go to anywhere else. And once you've got a few more, I would even say it's time to think about going global. And you South Africans know the answer to this better than most nationals of any country because you've suffered from the ravages of what can happen to the rand. And I'm from New Zealand originally. We had it there too. We had exchange rate controls. If you left the country, it might still be the law. If you left the country for more than 13 weeks, they stopped your social security payments and your pension and stuff because they didn't want anyone, heaven forbid, to spend their New Zealand dollars overseas. So you need to spread your risk a bit. And if you're going to spread your risk, why put it into a market where the currency is going down, where the population's in decline, and where there's no growth? You are far better off investing in places where there is great growth. And I always say it is so easy to beat the average. The average growth rate long-term in this country for real estate is about 9.7%. But don't settle for 9.7. That's the average. That includes little cities that have shut down because they used to have a steel plant or a coal mining plant and they've shut down. They might have negative growth. So the 9.7 is the average. That means there are other places that have high growth. That's why, as we said before today, if you invest in Las Vegas or Phoenix, you will beat the national average by a wide margin just by picking those cities. So let's say we're talking about Phoenix. You don't even have to pick a house at random here because there are suburbs that for decades have grown at faster than the average rate and other suburbs that grow at less than the average rate. And these stats are easy to come by. You compare that to stocks or shares or whatever you call them. It's very hard to pick something, a market sector that has higher than average growth. They used to say it was technology stocks, and then we had the technology crash, and then they said it was bio, whatever, and then that crashed. It's very hard to pick, and it doesn't tend to have those trends for a long term, but real estate trends stick around for a long time. So yes, invest overseas to hedge your bets, and if you're going to invest overseas, why not pick a fast-growing market like Phoenix or Las Vegas?
I'd love to know what your thoughts are on that. I'm a big believer in learning directly, going straight to the horse's mouth. So, that's me. I paid $8,000 to be on the ground to get that video and to learn from Dr. Dolph DeRoos. Right, number 8. So, Rich Dad Poor Dad, we spoke about it, the E, the B, the S, and the I quadrant. What does he have to say? Well, focus on education and financial intelligence. So his whole logic is, don't be told by other people what to do. At the end of the day, get the knowledge so that you can be empowered and make the right decisions for yourself. Cash flow over diversification. So what he's talking about here is often people diversify in the stock market and they think they're very diversified, but they're not actually earning any income. And ultimately, it's income that gives you freedom. So it's really important that you focus on the income to get that freedom. Invest in what you know. So this is quite an interesting one as well. Quite a few people say this. Tony Robbins said it as well. Don't kind of be, like as an example, for me, mutual funds and futures and all these things that are very fancy, I don't understand them and therefore I don't participate in them. They just don't make sense. We'll go into that more in day 2 and day 3. It's very important that you kind of got an understanding of what you're doing. However, saying that, I've taught you already this morning, you can also do it through partnership. If you know that your partner has got a far better understanding, then you can accelerate that curve a lot quicker. Be aware of the risks. This is really important. You know, everything that you invest in has risks. So how do you manage those risks? And alternative investments. So, sorry, not Dr. Dolph Lewis. Robert Kiyosaki is famous for gold and silver and oil and property and, you know, crypto and everything that's alternative. You know, I'll talk more about it in terms of primary and secondary markets, but he's very much into the primary markets. What about number 9? Clem Santa. You know, someone who's very famous from the South African part of the world. You know, he's one of the top 5 strategists in the world. He's lectured at Harvard. He's helped the Chinese government with regards to their strategies. And he says that economic and business diversification, diversifying income sources or business activities can help mitigate risks and increase resilience. You need a long-term outlook. Santa emphasizes taking a long-term view when considering diversification. He says you need to consider multiple scenarios. This approach enables individuals or organizations to prepare for uncertainties and adapt to changing circumstances. And then finally, collaboration and partnership. Santa often emphasizes the importance of collaboration and partnerships in diversifying efforts. So, you know, very much 2 things for him. One is diversification and the other one is partnership. What about number 10? Well, you couldn't talk about investing or money without Warren Buffett. And whenever I bring up diversification, I find it interesting because people give me this. Diversification is protection against ignorance. It makes little sense if you know what you're doing. So that's what Warren Buffett said. But if you go and read Snowball and you actually go and research, like rather than just take a high-level comment, this is what he believes in: concentrated investing. Exactly the same as Ray Dalio, exactly the same as Tony Robbins and a couple of others. So rather than invest in 500 different mutual funds, you know, be in concentrated. Secondly, have a circle of confidence. You know, either yourself or your partners need to know what they're actually doing. Quality over quantity. So rather have, you know, Ray Dalio said 15 quality investments. So it's not about having 150 or 1,500. It's about having 15. Have a long-term perspective. Risk management. You know, Warren Buffett says, rule number 1 is don't lose money. Rule number 2 is refer to rule number 1. Now, I think we can safely say that all 10 of them have summed up that formula that financial success equals diversification. However, what are their results? Well, Ray Dalio manages $160 billion, and his average results for the last 40 years, obviously it's ups and downs, but his average has been 21%. Who here would like 21% a year on average for 40 years? Means you're doubling your money every 5 years. Now, you know, it's fairly easy to get results like that over 1 or 2 or 3 years, but to do it consistently for 40 years, and also when you're managing $160 billion with a B, that's fairly impressive. What about Vanguard? In the last 30 years, the S&P 500 ETF has obtained a return of 9.8%. JP Morgan. So if you look at the results here that JP Morgan did, the S&P's earned on average about 9.5%. The individual investor that's tried to go out and do it all on their own has only earned 3.6%. What about all the major banks? So this is something when we do our mastermind, every single month, our family office comes in and shows us all the different asset classes, what's growing, what's not. This is called asset allocation. And you can literally go through all of them. And every single month we go through this. Which assets are going up? Which assets are going down? Why? What are the trends? You can actually notice there's trends here in terms of, you know, so it's very important to, you know, if you're going to make decisions, to have the right information in terms of these decisions. What about Cambridge and Associates? So this is quite an interesting one. A lot of people, you know, don't even know what private equity is. And yet, if you look over the last 20 years, if you take the stock market, which is in dark blue, and you take private equity that's in light blue, it's private equities outperformed the stock market over 5 years, 10 years, 15 years, and 20 years. And people are like sitting here going, but I don't even know what private equity is. What about Bloomberg, Barclays, and Cambridge Associates? It's really interesting. If you look down here, so at the bottom, you've got risk, and on the left-hand side, you've got return. So from the bottom to the left to the right is an increase in risk, and on the left-hand side, it's an increase in return. So you want to be in this top left corner. You want to be in low risk, high return. That's where you want to be. But if you look at the average portfolio of how most investors invest, they've got 30% in bonds and 70% in stocks. They're in the high risk, low return bracket. And all they need is 20% private equity, and they would change into the low risk, high return bracket. Not my opinion. It's based on the results of the last 25 years. Now, don't worry. On Wednesday, we're going to be going through the top assets, and one of them is going to be private equity, as an example. What about wealth migrate? Well, again, according to the regulator, the SEC in America, the stock market has earned an average over the last 20 odd years of about 8%, and private equity has earned an average of about 12%. What's interesting is that the stock market has got more risk. Okay, so this is risk on the right-hand side than private equity does. And if we take wealth migrate, we've earned an average return for the last 10 years of about 14%. So that's alternative assets. So can we say that if you look at the formula, if you look at the hypothesis, diversification equals financial success? Yes or no? Do you agree with that or not? I had a hypothesis that diversification equals financial success. And I've just shared with you 10 of the most successful and respected either companies or individuals and their knowledge around investing. And I've also shared with you their results. And again, when you're doing a thesis or a dissertation, I've done 2 of them, so I know what I'm talking about here. It's not based on my opinion. It's based on the facts. Yes, Stain, it's in dollars. Everything we do is in US dollars. So it's not taking capital depreciation into value. Funny enough, for Stain, there's actually a video you can go find on YouTube where I was interviewed by CNBC, and I was with a financial planner, and he said he was getting his clients about a 17% return. And I said to him, okay, well, let's unpack that return. And he said, no, well, you know, there was about, I can't remember exactly, but like 6 or 7% rand devaluation and about, you know, 8 or 9% capital growth, and the rest was income. And so I was like, okay, but let me just be clear. What you're saying is that your clients are getting like a 2% income, and the rest is capital growth or rand devaluation. And he was like, yes. And I was like, okay, well, like you got to compare apples with apples. We're getting an 8% income return and, you know, a total return of about 14%, which means 6% capital growth, with no rand devaluation, because we don't take that into account because you're not in control of that in any way. And it's so interesting comparing an apple with an apple in terms of the process. Okay, so that's the formula. Diversification equals financial success. So if that formula is there, and if it's so simple, what is in your way? And we believe that there's 5 major myths that kind of stand in the way. The first one is that global investing is only for the wealthy. Now, many people believe that global investing is only for wealthy and requires a lot of money to get started. However, there are many low-cost options available to investors who want to diversify their portfolios globally. If you look at retail investors, Kathy Wood, that's one of the top venture capitalists in America, says don't underestimate the little guy who's changing investing. Equity crowdfunding is making private markets public. In this country, in South Africa, Charles Savage says we think that fractional investing represents the future. Retail investors used to be wrong, says veteran Wall Street institutional trader Tiger Williams. Not anymore. Now you got 50 million of them all tied together and they really matter. Why platforms? Well, the Wall Street Journal, the key advantage of digital platforms is the ability to access more deals and invest smaller sums. Unlike REITs, these platforms allow people to invest in particular buildings. Forbes, these platforms do more than provide access to institutional quality deals. They excel at disseminating critical information that investors need. And I love this. This was a screenshot from someone on that was sent to me. And it said, thanks for having the $10 entry. So like on Wealth Migrate, other platforms as well, but on Wealth Migrate, you can invest from $10. Makes me feel like a property tycoon. Move over Gary Cardone, or he means Grant Cardone, or Donald Trump. And, you know, for me, if I just share with you quickly, if I just go to my screen here, I'm going to do more of this in the days to come. But I just want to show with you very quickly here. So if I'm literally going into Wealth Migrate, I'm logging in here, and I'm going to go. I'll show you more around the platform, but ultimately I decide I want to invest in Germany. I'm not going to go through all the details. I mean, you can go look at the calculator and the risks and everything else. But for today and right now, I decide I want to invest. So I literally go, I'm going to invest $10. I digitally agree and sign the contracts, and I go agree and I go make investment. And you've literally just watched me invest in Germany. So if you go to my portfolio, there's my German investment. So, you know, I always say to people, don't tell me it's not possible. You know, with even 15 quality investments, Ray Dalio, that's $150 that you need to be able to get started. And I must admit, it's at this point that I get like super exciting. So don't tell me it's not possible. It is possible. And Wealth Migrate, in my opinion, is the only one that I'm aware of that can help you diversify across countries, currencies, assets, partners, and time. But there are other platforms that you can invest in. Okay, investing in foreign markets is too risky. That's another reason people use as an excuse. Some investors believe that investing in foreign markets is too risky because of political instability or currency fluctuations. While there's always some level of risk involved in investing, there are many ways to mitigate risk through diversification and careful research. A good example of this, I wrote this book, Property Going Global, that was endorsed by Clem Sunter. And in this book, I actually shared with people where to get all the research. And you can actually see here that, you know, we started investing in Australia, literally at this point in the market. We started investing in England at this point in the market. We then stopped investing and we restarted about here in England. And in America, we got it literally perfectly right. Within 3 months of the bottom of the market, we started investing in America. And so, you know, my opinion is that if you've got the facts, if you've got the fundamentals, if you've got the systems, then you can do it. And I'm going to share with you over the next couple of days, Wealth Going Global, which is the digital upgrade of this book. So this book, Property Going Global, Wealth Going Global, is the digital upgrade. And, you know, I'll share with you where to get the right information so that you can choose the right countries, the right currencies, the right assets to be able to invest. I want to share with you a little story. And this little story is a gentleman called Michael Honeysett. And he came on a buyer's trip with us back in February 2013. And it was really interesting because when he first sort of, you know, came, and he's just like you, he came on a webinar and then he came to a live breakfast. And he's, you know, in his mind, he thought it sounded too good to be true. And I'm sure it's like many of you. It was like, oh, you know, the risks and whatever. And in those days, you had to pay $2,000 to come on a buyer's trip with me to America. And he was like asking for a discount. And I remember thinking to myself, cross, it's like, what am I going to do with this guy? Like, you have to buy properties, $80,000, $100,000 cash. You know, like if he's asking for a discount on $2,000, like we don't have a much alignment here. Anyway, long story short, he came on the buyer's trip, and I'll never forget, we were sitting in Memphis and he came up to me and he said, you know, he was very, very clear on his goal. He had a specific passive income amount that he wanted. He had 2 daughters at the moment that were teenagers at the time, that were teenagers. And he wanted to give them the freedom to be able to study wherever they wanted, to be able to live wherever they wanted, to be able to work wherever they wanted. And I'm truly, truly grateful that 10 years later, or it's now 11 years later, Michael and his family are living in England. His daughters have studied, have the ability to study where they want, to be able to live where they want, to be able to work where they want. And it's so interesting because he literally said to me, when I joined, it was the best money I ever spent, and it would never have happened if I tried to do it myself. And I think the point of my story here is that it is very difficult to get the right information and to be able to do it all yourself. In fact, it's impossible, in my opinion, to be able to diversify around the world, to know all the different markets, to know all the different asset classes, to find all the partners on your own. I fundamentally believe it is impossible. But if you do it through partnership, then I believe it's very, very possible. It's too difficult to invest in foreign markets. Investing in foreign markets may seem daunting to some investors, especially if they're not familiar with the language or customs of the country. However, there are many resources available to help investors navigate the complexities of investing globally. And I did share with you already today, I think the key is to have the right information and to have the right partners. I'll give you an example of that. Ryan started investing in June 2009 in Brisbane. He wanted to buy 5 properties in Australia. And, rather than buying a home where he wanted his house, he bought properties that were what the mom and pop Australians wanted. So he bought 4-bedroom, 2-bathroom homes in Melbourne and Brisbane, and they were the best performing assets. So residential property was the best performing asset in the G20, which is the top 20 economies in the world, in 2009, 2010, 2011. And he literally rode that wave by having the right information, by having the right partners. And a couple of years later, he sold those properties. He immigrated to Australia. He now lives on the Gold Coast, and those properties set him up for success in Australia. Global investing is not necessary. Some investors may believe that they can achieve their financial goals by investing only in their home market. However, by not diversifying their portfolios globally, they may miss out on the potential opportunities for growth and may be more vulnerable to economic downturns in their home market. And, I always say, people think, oh, well, it might just be a South African thing or a Chinese thing or an Indian thing. That's absolutely rubbish. If you had invested all your money in the American property market, the residential market in 2007, 2008, you would have felt like a class clown. Some of the property markets lost 40 to 70%. Las Vegas lost 70%. Imagine owning a house for $1 million that was now worth $300,000. That's what happened in Vegas. But what about the stock market? We had a webinar last week with James Painter, where he actually showed people that over the next 5 to 10 years, the stock market could lose anywhere from 50 to 80% of its value. Now, you might think that I'm being sensationalist. Go and watch the webinar. Go and watch. I've worked with James for over 15 years, and he has an uncanny ability of looking at different scenarios and tracking trends. And, when Bitcoin was at 3,000 Rand to the dollar, $3,000 to the Bitcoin, and he said it'll go over 50. And I thought the guy was absolutely stark staring mad. And it went to $69,000 the last time. A number of times he's spoken about currencies, and they've gone in the right, as per what he said, even though it didn't make logical sense. And so when he says this, I think it's something really important to take into account. And it's something that we share with our wealth hackers, this information and access to these partners, so that you can make the right decisions. And then, you talk about cycles. And a lot of people, even now, the current property market, interest rates are high, property prices go down, people kind of see these property prices going down, but you need to kind of look at them in terms of the long-term trends and the fundamentals. And I'll give you a good example of this. So in London, in late 2008, when we had the crash, property prices in London lost 20%. But we went and bought 26 apartments in a place called Greenwich. And you can see here this particular development. And this gentleman, Don van Rensburg, he bought 4 units. He bought them at a 26% discount. He got positive rental once the building was finished in 2011. So pretty much for 10 years, he got positive cash flow rentals. And he bought the properties for £313,000 each. And he sold them for £1 million each. Now, who here would like to buy property for £300,000 and sell it for £1 million? And I know you're going to sit here and say, oh, Scott, it sounds too good to be true. No, it's back to having the right information and the right partners. So if you go back to City Peninsula, you know, this is an article from 2022. This company was investing $8.4 billion into Greenwich Peninsula. There's 17,500 homes being built, 84,000 square meters of commercial and retail space, 20,000 square meters of cultural attractions. You know, when we invested in 2009, 2010, they just put the tube in. Canary Wharf was the new financial capital of London. There was massive growth and massive infrastructure being built into the area. And that's why this, you know, Don and all the other investors achieved those significant results. So again, it's about having the right information and the right partners. And then lastly, myth number 5 is I don't know how. You know, well, I want to invest in America, England, Europe, Australia, South Africa. You know, how do I do it? Well, let me share with you how I did it. So I wanted to invest in America, and I'd been to America a couple of times. I went there in 2010. I spent 5 weeks. You know, they always say when there's blood on the streets, there's opportunity. And Warren Buffett says when people are fearful, be greedy, and when others are greedy, be fearful. You know, so obviously we'd had this massive crash around the world, and I was like, I want to get into the American market. So in 2010, I went and I spent 5 weeks there, and I couldn't find anyone I could trust. Couldn't get the right information, couldn't find the right partners. So I went back in 2011, and then no, sorry, not 2011, 2012. And I went back with 2 partners, Brendan and Neil, and we flew from the West Coast to the East Coast. So we flew from San Diego right across on the West Coast, right across to New York on the East Coast. And we did 8 cities in 9 days. It was pretty crazy. And we went to just meet partners and try and find partners that we could trust and get the right information. So you can see pictures of San Diego and all this, you know, all this chaos on the streets, you know, renting and property for foreclosure. And this is properties in Atlanta and Memphis, all boarded up, and rent to own, etc. And then we went through to New York, and this is, you know, properties in New York, and then down to Orlando and looking at properties in Orlando and Walt Disney. And literally, this is in New York here. So we went right across the country, and we came back, and, you know, Neil Peterson owns Real Estate Investor magazine. And we came back and we shared with everyone what we had found, like literally on the ground in America. And it was so interesting because the rand at the time was 8.50 rand to the dollar. And, you know, when I last checked this, it was 19.80 rand. I think it's a little bit stronger now. It might be 18 or whatever, but it's kind of irrelevant. It's more than halved in that time. And we said to people, look, there's a real opportunity on the ground in America, and we found partners that we can trust. And, you know, we helped hundreds of people to invest in America in houses. We did buyers trips. So people got on airplanes and they flew with us. You know, this is 10 years ago. And they set up bank accounts and they set up LLCs, which are special purpose vehicles. And, you know, you can see us here opening bank accounts and buying houses and traveling to all the different cities and getting the right information and meeting the right partners. And it's the strategy that we used in those days, because that's what you had to do. You had to get on the ground. You had to get the information. You had to meet the partners. And the beauty is what's happened 10 years later is that it's much more digital now. You know, we're having this presentation. It's online. You can meet these partners digitally. You don't necessarily have to get on airplanes anymore to fly overseas. And that's why our formula is so important, because we fundamentally believe you have to diversify across countries, across currencies, across assets, across partners, and across time. It's all about building globally diversified passive income. And, you know, over the last 10 years, we've helped 4,000 plus investors achieve wealth protection, Plan B, peace of mind, diversification, passive income, freedom, global citizen, empowering your children, immigration, living a life unlimited. You know, really, what is it? I've shown you already the stats. You know, over $1.3 billion facilitated, over $100 million through the platform, $30 million paid out in distributions or dividends. And for me, it all comes down to 2 things. You need the right information and you need the right partners. And what we're going to share with you over the next 4 days is, today was about teaching you that diversification is the key to financial success. That was the objective. For the next 4 days, it's going to be sharing with you how you can get the right information and the right partners. Is that a fair deal? Yes? No? Okay. So I've spoken quite a lot about Michael Honeysett. And what I'd like to do is just share an interview that I did with him. As I said to you, he's now living in England. And funny enough, he reached out to me just yesterday and I was chatting to him. But I want to share this video with you because I'm a very, very big believer in real people, real stories. Anyone can talk, anyone can do PowerPoints, but if you can learn from people that have actually done it, then I think that'll give you a huge amount of confidence. And so this was an interview I did with Michael that I want to share with you. So Michael, just tell us your story. You know, it was 10 years ago, or probably quite a lot longer before that, that you were like, hey, I need to do something. I want to, you know, I've got a business locally and I want to kind of invest internationally, etc. Just talk us through your journey of like how you got to that mental decision that you wanted to do something.
Well, I did actually, I tried to do it by myself, but I mean, you actually said most of what I was going to say in your presentation, but I can only enforce what you said. I tried by doing myself. I actually went and saw a financial advisor in this country, and I just wanted more. So I actually found you through, you already mentioned Neil Peterson's magazine. You had an advert there, and I made contact. And then that's where it all started. But I did watch you for about a year because at the time, as you always know, as I didn't trust people at the time, you know, so I was very scared. So I did talk to Kristen. I did make contact with her. And that's where we started with the connection between me and Wealth Migrate.
Tell me, Michael, why did you want to invest overseas? What were your reasons, you know? And again, this is not based on any one country, because most people, no matter where they are, you know, are trying to figure out how to do something out of it in another country, but it's actually very scary and very overwhelming.
100%. Well, I actually, the problem is I watch your webinars all the time. I'm always one of your participants watching you. And one of the things you do as a presentation is the value of the rand is just devalued radically since 1975. And I just wanted to diversify into something better than the rand. And at the time that I made contact with you, the United States was the opportunity.
And tell me, you know, why did you choose to get on a plane and fly over? I mean, again, it wasn't just your time that it took. You had to invest money to even just come on the buyer's trip, etc. You know, why did you do it? What were you trying to achieve?
Well, again, as I said, I wanted to diversify from rands into a foreign currency, being anything dollar, pound, euro, whatever's available at the time. And then I ended up speaking to you. And you gave me that information at the time because I know you had done a trip to the United States, which you've already mentioned. And you had already done, you had flown all over the place and done a lot of investigation as to which states were the landlord friendly and which were tenant friendly. And you said to me at the time that the United States was definitely the opportunity, which is why I decided to come and book and come with you on a buyer's trip to have a look for myself, and also the other factors that I wanted to go along to make sure that I could trust you.
Yeah. You know, 10 years ago, you know, feels like a lifetime ago now, you know, in terms of having to get on an airplane and fly over there and everything else. And, you know, when you got on the ground and kind of you saw what was happening on the ground, and in many ways you could simplify it down to information and partners, what did you find there basically? What did you like about it?
Well, first of all, the number one reason, the first thing I found was the fact that I could trust you. You wouldn't take me on a fly-by-night. You showed me exactly what was going on in the United States at the moment. Because, you know, we went to 4 different cities at the time. and you showed us all the different opportunities at the time. And we actually also met all the accountants, the lawyers, the different people that were looking after the properties. And also the fact is that you were a team, and your team and you had gone across and done all the investigations. I didn't have to do anything. All I had to do was listen to you.
And tell me, in terms of, you started in residential, and then you evolved into commercial, and then you evolved into other countries as well. In terms of, if you look back over the last 10 years, what are the sort of the results? Because, one of the things I've always appreciated about you, and where most people don't have it, by the way, and ironically, it's why it's the very first thing on the sheet. What are your whys? Why do you want this? Because when someone gets clear on their whys, they're going to be far more committed to making it the reality. And I've got a gift that I'm going to share with everyone at the end. My point being is that you were very, very clear on your whys, and why you wanted to achieve what you want to achieve. And how's it been for you over the last 10 years in terms of actually looking to achieve those results?
Yes, I have definitely achieved the results. I mean, the opportunities I had in 2013 when I came with you on the buyer's trip, it's now nearly 11 years that I've been associated with you. It's certainly paid dividends, there's no doubt about it. And my why was to have a passive income, being in a foreign currency, being in whatever is available at the time, and dollars that was available at the time when I invested. And when I actually bought in 2013, I changed the 9.1 Rand to $1. So you can see what's happened in the last 11 years that I've been associated with the Rand. And that was my goal, was to get a passive income in a foreign currency. And it didn't make any difference from where I was in the world. I had something that I could live on.
Yeah. And what do you think the consequences would have been if you hadn't have done it? So I always find it fascinating, those events we did, and I showed pictures there, they were live events, we did webinars, and I mean, thousands of people attended those live events and webinars, and yet only a couple of hundred actually took action. What would have been your consequences for you, let's call it 10 years later, if you hadn't have done something?
Well, my drive was basically just to, I didn't believe in the Rand. Unfortunately, I still don't. And my drive was to find something. I always believed in property. I went on your website, I saw the opportunity from you, because at the time you were doing a lot in Australia. And that's why I ended up speaking to Kristen before I spoke to you. I always wanted to change my money. I had changed money, and I did have investments in the Channel Islands in pounds. But as you know, banks don't give you a huge return, and I wanted something better.
I was actually going to sort of allude to that, because most people that I've met over the years, when they think diversification, they've set up a bank account on the Isle of Man or somewhere, and they're getting 0.1% or whatever in basically no return. And what other products or had you tried anything to try diversify before that? Basically, you mentioned you've gone to see a financial advisor or whatever. Most people have tried to do something. Like, what else did you try?
Well, the financial advisor gave me advice, but everything was locally last, and he was only looking at investments in this country. And as I keep alluding to, the fact is that the Rand, if you look in 2013, and it's now we're talking about 11 years later, at 9.1 to what we are now, it's just phenomenal what it's done. How it's devalued and how I've gained by earning dollars.
Yeah, just by the way, it's not only a South African thing. As part of our mastermind now,
No.
We've got English members, we've got German members, we've got Italian members, Australia, New Zealand. Because I think a lot of people realize that, like, to have all your eggs in one basket is a risky strategy. Full stop. I mean, you're not only in America, you're also in England. You're currently moving the family to England. I mean, talk us through the feeling of what I like to refer to as a global citizen. So that's where someone can make a decision and say, hey, I want to live here, or whatever. And both your assets plus your income allow you to make those decisions. But I mean, talk us through that, because you're now in a place to be able to make those decisions, you know?
Well, the properties that I purchased in 2013 in America is definitely appreciated in value. And they gave me a passive income. And I've always said capital gain to me was always a bonus. It wasn't part and parcel of my goal of actually investing, because I was looking for the passive income, not the capital gain. I have invested with you in the United Kingdom. I'm earning, but it's obviously in dollars. So that has given me an income as well. So it's wonderful to be able to go to the United Kingdom, go and get a passive income into your bank account monthly, and being able to do what you want.
Yeah, and I mean, in your case, I always remember you were so clear about your daughters, and obviously they've grown up over the last 10 years, but you now got the ability to provide them the opportunities that you wanted. And that's what I always talk about when it comes to freedom of choice, because that, in my opinion, that's a lot more tangible than money. Like, it gives me goosebumps talking about it, because, you know, they're in their early 20s now, you know, mid 20s, whatever. But because you made decisions 10, 11 years ago, you've got the ability to give them the ability to make decisions, etc. And I mean, just talk to us about that feeling as a parent.
Well, that feeling as a parent is probably the best possible place to be, you know, because that's what you want to do, is to give your children the best opportunity and be able to go anywhere in the world and do anything you like. And please don't let me, I'm not putting South Africa down. It's a fantastic place. I enjoy it, and you know, I was born here, so I had no reason to go. But I just see there's more opportunity in United Kingdom at the moment, and jobs are abundant in the United Kingdom. South Africa, unfortunately, doesn't have that ability.
No, completely. Tell me, my last question, just in terms of, you know, I always laugh with you because, you know, you and I had a long wrestle as to, you know, how much money you were going to pay to come on that buyer's trip. And I do remember it was quite a funny thing, but in those days it was like 20,000 Rand, which is like $2,000. I remember Michael going like, well, I can't afford, like, you know, pay the 20,000 Rand. And I was like, this is, dude, we're going to buy houses. Like, I think we might have a serious mismatch here. But as we got to know each other over the years, you just said, look, like, I really don't trust you, and I wanted to limit my downside. What would you kind of, and again, you're not giving financial advice, but just from your personal experience, for those people that are sitting on the fence, you know, saying it sounds too good to be true, whatever, like, you know, you were there basically, and yet you took a leap of faith, albeit you did more due diligence and whatever, and I'm not disputing anyone shouldn't do that. But, you know, you went out and you got the right information, you got the right partners. You know, what would you advise to someone who's sitting here, you know, whatever, and not quite sure what to do next?
Well, procrastination is probably the worst possible thing you should have. Okay, because yes, you do sit on the fence, and you can sit like that for 10 years or whatever time period you choose. And but you have to take that step, right? And my problem is, as you know, is that we deliberated that amount of money that you wanted me to pay to go across to the United States, and I didn't know if I was going to lose the money, and I don't know if what you're going to show me was what I wanted and was legitimate. I had no idea. So it was only that when I met you in Joburg and we got on the airplane, we went across and had a look, then obviously I believed you in you.
Well, Michael, to yourself, thanks very much for jumping on. I really, really appreciate it. To, you know, yourself and Lee have become good friends over the years, and it's really, I deeply, deeply appreciate you coming and sharing your experience. And why I appreciate you sharing it is, I call it real people, real stories. You know, and you know what a lot of people do is they'll put me on a pedestal, or they'll put Ray Dalio on a pedestal and go, oh, but it's easy for you, you can do it. So I started with nothing. I have no silver spoon from my dad. So, and let's talk to someone else that you know, and again, I'm going to say started with nothing, because in 2012, like, you hadn't started yet, like, you know, and yet 10 years later. And I just deeply appreciate you sharing that. And by the way, it hasn't gone well. Like, I know that some of the tenants didn't pay the rent sometimes, and you had a fire one time, whatever. So like, anyone that thinks that it's like hunky-dory and everything works, like, has never been an investor. It's that simple. Like,
Yeah.
you know what I mean? But you know, again, if you've got a good partner on the ground, They'll help you fix the problems, you know. So, you know, please understand that there's no such thing as Michael sitting here and going, oh, it was perfect and nothing went wrong, because that's just not how it works. But I do like to resonate with your story so that others can go, well, if they can do it, like I can do it. You know what I mean? And whether you want to do it with us or not, I actually don't care. But like copy what you're hearing here. And I think the number one thing that differentiated you from so many other people is that you took action. You were running a busy company, but you took time out of that to plan for your future self, you and your family. And, you know, it's allowed you those choices 10 years plus later. So just well done, dude. You know, thank you for your time and congratulations.
Scott, all I can do is actually say thank you very much to Wealth Migrate for giving me the opportunity that I had in 2013. And I'm so glad that I followed through and did come through with you to the United States and have a look at the opportunities. You spoke about the medical centers. I've been part of that journey as well. So yeah, I've done very well. But also Wealth Migrate, it's an incredible team that you've got. You know, every time you want information, it's ready to be available. You can phone anybody, they talk to you, they answer your emails. So, you know, you're a business that is actually available for anybody that invests and to get all the information that is required. And yeah, it's been wonderful that we've become friends. And to me, you being at the helm of the Wealth Migrate, it can only go from strength to strength.
Oh, well, thank you for the kind words. I deeply appreciate it. And yeah, I think just two questions here from everyone else. Taffy's asking whether you are related to Trevor Honeysett.
I am, yes.
And I know Taffy's in Durban as well. And Lynn's asking, what type of return on investments have you realized? So obviously it's a broad brush question, but what on average, basically?
Around about 11.5%, 12% in US dollars.
Yeah. And I think that's also broken down into probably roughly 6 to 8% in income and you know 4 to 5% in capital growth. Just, you know, again, different investments differing. But yeah, just in terms of,
it's been a 10-year term, and as you said, there has been problems, but generally it's been reasonable, you know, and it's been a lot better than what I would have got in the bank here in South Africa or in the bank in Channel Islands.
Yeah, awesome. Well, thank you, Michael. Wonderful to have you online, and yeah, I hope that everyone else has resonated with your story and taken away their own tidbits. You know, if Michael can do it, then so can you, and it all starts by making a decision.
Well, if the people are sitting on the fence and they're procrastinating, believe me, you've got to take a stance and you just got to move ahead and do something about it. And you'll see the benefit in like I have in 11 years' time.
Yeah. Awesome, Michael. You're a star, mate. Thanks so much.
Thank you very much, Scott.
Cheers, brother. So did you enjoy that? Like I said to you, I love real people, real stories. I see Micheline said I was also on the buyer's trip and it was all about trust and transparency. You know, Anonymous said, I've started investing with easy equities. Would it be better to split between property investing and equity investing? Let's talk about that tomorrow, Anonymous. I'm going to go through the different asset classes tomorrow, but hopefully today you've seen the formula that diversification is key. Carola said, sorry, Carola Mayer, I hope I'm saying it right. But looking at the German investment, I was wondering what might happen to that if, as some are predicting, the war would spread and Russia were to invade Germany as well, or NATO get involved in the war in general. Not expecting you to be a prophet, but you do. But do you have any idea? Yeah, and I think my philosophy to that, Carola, and I don't normally do kind of Q&A now. I'm going to do that as part of the FAQ, which I'm about to pivot to now. But in simple terms, back to diversification. You know, we could sit here and we could say, well, what about America and the fact that the US dollar is expected to devalue anywhere from 25 to 60% against the euro. There's a lot of pros and cons to all different investments. And that's why diversification becomes so important. As Michael just said, not all investments work. Ray Dalio said, you know, you reduce the risk by 80%. And the reason being, if you invest in 10 different investments and 2 of them don't work, well, you've reduced your risk by 80%. Just, it gives you an example, basically, of what I'm trying to say. So, you know, Am I worried about a war in Germany and Russia and NATO and all that sort of stuff? Yes, I think it's something to take into account. Have I personally invested in Germany? Yes, I have. Why? Because I actually think there's more important fundamentals, and the more important fundamentals are that Germany at the moment has a very good buying, a very good buyer's market. They always say when you're buying property, buy from motivated sellers. So there are sellers that need to sell right now. We're buying it at very good prices. The euro is expected to go, increase dramatically against the US dollar over the next 5 to 10 years. It's a very good partner with very good income. And so I look at all of those things, and they outweigh the risk of what I'm going to call a war. But I don't put all my eggs in one basket. If I've got $1 million, I don't take all my $1 million and put it in one deal. I'm going to spread it around between different deals in different countries, with different partners, different assets, different currencies. I think you get the formula in terms of that process. Okay, in terms of the questions, let's go quickly. I just want to finish off here. I don't want to go into Q&A. That's the whole point of the VIP session. So let me go quickly. We started off earlier with Jordan, and I said to you, does it resonate? This is a gentleman that we've actually helped. 55-year-old, worked very hard in his life, wants to build a portfolio and ensure his wealth is protected. I reminded you all the things that he wanted. Build a globally diversified passive income of at least $5,000, $10,000, $25,000. Diversify his investments between countries, currencies, and assets. Uses limited time. Successful people have limited time to get effective results with predictability. Save decades of frustration and millions of dollars to get the right knowledge for him and his family. Wealth protection, plan B, and peace of mind. Be held accountable and have an accountability partner to get results. Have a family office to help manage all your financial affairs. Create generational wealth for his family. Have a fully completed execution wealth plan and investor strategy sheet, and to get results. And then Victoria, an entrepreneur in her 50s, devoted to her family and business, aiming to build generational wealth. She's got a packed schedule. She wants a streamlined investment strategy that empowers her to make wise decisions, aligns her goals, and frees up her time for her grandchildren and daughters. Wants to understand the investment landscape so she feels empowered to make the right decisions for herself and her family. And she wants to focus on financial freedom to cherish more moments with her loved ones. So, if those two people resonate with you, these are the type of people that we've helped achieve these results. And I want to help you achieve your results. Can you see yourself doing this? Can you see yourself as our next testimonial? Can you see yourself as the next Michael? Maybe not in 3 months, but he's expressing what he's achieved over the last 10 to 11 years. But the big difference between Michael and many, many other people is that he took action. He didn't just sit here with theory, he took action, and he spoke about it. And did he get it 100% right? No. Did we help him get it 100% right? No. If I was to sit here and say to you in investing that we've never got it wrong, I'd be either lying, cheating, or stealing. Because I guarantee you, I've been doing this for 28 years. You do not make mistakes in 28 years. It just doesn't work like that. So let's go to some action steps. I remind you of the silver, which I highly recommend is the compulsory. And then the gold is your bonus. So for your silver, identify and list the risks associated with not diversifying. So yeah, keep all your eggs in one basket, in one country, one currency, one asset class. Identify your risks of doing that. Secondly, write down what is stopping you from diversifying. Secondly, fill out your 5 whys. So literally take this sheet and fill out your 5 whys. Why is it important for you to diversify? And then share one key takeaway on social media. Now, you're going to see me talk about this over the next 5 days. One of the greatest gifts I've ever been given is that when I go and learn something, I always share it with others. And the reason being is that although they think I'm giving them a gift, they're giving me a gift. And the reason being is because I share, it helps me to synthesize what I've learned. And so you've just been listening for the last 2 hours, and congratulations for investing the last 2 hours of your life in this. But it's now about synthesizing it and like saying, what is your key takeaway? And that's what I learned years ago. is take a lot of complex information and like synthesize it. So go and share it, put it on the Facebook group, share it with your friends. Use the hashtag diversification, but this is for you. This is not for others. This is for you. It helps you take 2 hours worth of knowledge and synthesize it, because simplicity is power. And then your gold action steps will be to create a list of assets and investments you currently hold and identify any concentration risks. I do remind you of what Shane has built for us, which is the resources page. And if you go here, everything is here. There are the action steps. They're written down just to make your life really easy for you. Everything's all in one place. So all you need is this resources page. And you've literally got everything all in one place. Okay. Shane's a hero for making life easy for you. If you're wanting to use the navigator in terms of the next steps, literally go along to this and it'll help you with your next steps in terms of this process. And the prize winner for today is Fern. So Fern Berger, well done. Congratulations. You have been upgraded to a VIP. And so I look forward to seeing you in the VIP session. I can see lots of people asking questions. Shane, I'm just going to confirm you're taking all of these questions and putting them into my VIP slides, because I'll answer all of them for the VIPs. I'm going to pivot now to the VIP room. I remind you of the homework competition. So post your daily homework in the Facebook group, and you'll be in the prize to join Fern and the other VIPs in the room in terms of that process. So, and Micheline, if you're not part of the VIPs, please Shane, if you can give Micheline access to it, I'd appreciate that. She's already part of the mastermind, so I'd love her to have access if she would like. For those of you, if you're not part of the VIPs, you still have time now to join. It's literally just go to it, and you can literally join the VIPs, and I'll answer everyone's questions. But yeah, you literally go to that link, VIP upgrade, and I am now going to pivot to go and do the Q&A. And just to remind everyone of the value of VIP, firstly, you're going to get the backstage coaching. So I'm going to spend the next hour or so answering any questions for anyone about anything, removing any blockages. I love it. It's my best part of the entire thing. Anyone can do a PowerPoint, but actually your knowledge really comes to the fore when people are asking you questions about anything. You'll get the replays, which you can have for life. You've got access to all the trainings, and you've also got access to Wealth Going Global, the first module in terms of that process. So yeah, it's just kind of a no-brainer for us in terms of that process. And then finally, if you need any support, if you're a VIP already, you can just email support@wealthuniversity.org. There is a VIP group, WhatsApp group. So I'd recommend joining that. And I know Shane will post the link now to the Zoom room. We're about to bounce. Some final things: join the WhatsApp group, join the Facebook group. I remind you of the formula: diversify across countries, currencies, assets, partners, and time. And it's all about the globally diversified passive income. And I want to finish with some final slides. What is the definition of insanity? Doing the same thing over and over again and expecting different results. Now, it's rare that we, want to do it. Otherwise, you wouldn't be here. But it's actually the how to do it. And the problem with most training is that there's no accountability, no monitoring, short-term feel good, failure to implement, lose focus and effectiveness. What then? Well, you go and do another course. You blame the person, you go do another course. I know this because I did it myself. And, if you're learning anything, let's just say time management, and you arrive today, well, your skills are going to improve. It's kind of natural, but then they're going to fall off. Remember, I told you about this. So you're going to be at a better level. And there's only one thing that you can literally do to go to the next level, and it's repetition. So you repeat, you repeat, you repeat. And repetition is the mother of skill. And this is the key to how to implement this. And this is why this is a 5-day challenge, to help you get the results. I'm going to share with you tomorrow Wealth Going Global, which is, where you can go a lot deeper. It's a home study course where you can go into the top 5 current, you can get clear on your why, the top 5 current countries, top 5 currencies, how to choose the top 15 assets, how to find the right partners and avoid 80% of mistakes, how to build a wealth plan over time, and smart investing. And then really imagine your year 12 months from now, if you were working on your countries, your currencies, your assets, your partners, your time and your time management, your mindset and your strategic thinking, your execution and your accountability. and you're investing and you're reviewing. Just imagine where your year would be. What's the plan for day 2, 3, 4, and 5? Well, specifically how to get and use the right information now, how to build a diversified portfolio, how to find the right partners, how to manage risk, and show you how to create a personalized wealth plan and investor strategy report to help you achieve diversified passive income, and then finally to take action. So yeah, I hope that you enjoy that in terms of that overall process. Nelson Mandela says, money won't create success. The freedom to make it will. I'm now going to pop into the VIP room. So if you want to come and join me, I'd love to see you there. To the VIPs, you should have the link now. And Shane, if you've got all the questions, I'd appreciate that. I'm going to jump out now and join Dawn. Yes, if you're part of the mastermind, you can also join the VIP. If you just reach out to Shane, he'll be happily be able to help you. Anyone that's part of the mastermind can join the VIP. No problem. Ladies and gentlemen, thank you very much for your time. Always an honor and privilege. I love these challenges. I'll see you tomorrow. Make sure today you've just got the knowledge, but now it's about getting the right information and the right partners. We'll see you tomorrow. Cool. Lekker. See you in the VIP. Fern, come join us in the VIP. You're a VIP member, so you've got access. You've been upgraded to the VIP. So we'll see you there now.